Good morning, trading world. It is April 11th, 2022, 8:05 a.m. And this is my pre-market outlook and technical analysis for day trading the SPY. The title for today's outlook: the consolidation zone still in play while the market decides on new trend direction. For intraday traders, it may not seem like consolidation, but it is. It's because we are consolidating on a larger time frames, so the ranges are larger than most traders are used to. For now, one of the things that we're looking for on this break out of the consolidation range, which we've gotten most of the signs that the new trend is going to be down, but there are still some things kind of holding us up, even though it's very few. And those few things that are holding us up are stocks in defensive sectors like consumer staples. I'm going to bring up a example real quick on the defensive sector or defensive stocks, because we definitely want to pay attention to that sector and the defensive stocks as they become overbought and their PE ratios become astronomical. Let's take something like Coca-Cola. All right, as you can see, Coke has had a astronomical run up here lately. And something that we really want to pay attention to, even though we're just about in that overbought place on the RSI on Coke, there's some fundamentals that you really want to pay attention to when it comes to Coke. And give me just a second. Let me try to bring that up. All right. I just brought up the Analyze tab with under the fundamental sections for Coke. And something that we want to pay attention to is the current PE ratio on Coke, which is 27, about or close to 28. And we've been kind of in this for a while. So to me, the 5-year average at 30, that's still kind of, well, that's still out of whack to me. So one of the things that you want to take a look at for me would be revenue, to kind of give you an idea on growth. And currently we're at 17, and the average has been 6.6. So this right here tells me that these numbers on the PE ratio, the price that we're at now, is just absurd. We're out of whack. Because for me, we should be closer to this 6.6 number as revenue. But because of the price soaring to these astronomical levels, it kind of puts us up where PE ratios are out of whack. And getting back to what we're saying about Coke, this current PE ratio of around 28, to me, what that says is it still has a potential potential, it still has potential for significant growth as a company. And if you know anything about Coke, you should know that as a product, it has saturated its markets, meaning there's not much more room to grow at all. So comparing these numbers to the overall consumer staple group, let me bring that up. Give me just a second. All right. So just a quick search of what the consumer staples average is in that sector. A PE ratio of 21. And as you can see with Coke, we're well past that. We're at 27 with a 5-year average of 30. So it is well beyond the average of that sector, meaning we're kind of in line for a pullback, if you will. And with Coke being ripe for a pullback, number one, that's a stock to me that's a sign that's about ready to look for a short end. But even furthermore, this tells me that Coke and defensive stocks like this with overgrown PE ratios are again ripe for this pullback along with the rest of the market. So when money is ready to come out of defensive stocks like this, where will it go? It's probably going to find its way back into bonds, pushing rates even higher, crushing the market even more. So this is something that we're looking to get ready for. This is why there are a lot of things that have already kind of shown itself as a sign that the new trend or the trend continuation is going to be down once we come out of this consolidation on the larger time frames. So that is what we want to consider as evidence of us sinking even lower in the overall market. Now, with that being done, let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the support side, we have Jack support at 444 down to the 443 area. Then we have Queen support at 442 down to 441 area. And then King support at 440 all the way down to the 438 area. On the resistance side, we have Jack resistance at 446 to the 447 area. Queen resistance at 448 to the 449 area. And King resistance at the 450 to the 453 area. The main thesis for today is bullish, closing above 447.57 with a projected high or target of 448 to 451. The alternate thesis is bearish, closing below 447.57 with a projected low or target of 443 down to 438. The time frame in control is now the hourly. Remember, with the level of volatility we are at, we are still likely to see large range two-sided trade. So it's likely to see a good part of both the main and alternate thesis. The weekly outlook is bullish, closing above the 447.57 with a potential retracement up to 451.64. My faith in this measure of the weekly is weakening by the day, so be careful because we are trying to establish a new trend which could break at any moment. The current channel we are in is 453 down to 425. That's the major channel. And the minor channel being 453 down to 443. So we're at a point we're getting ready to punch back through to a lower channel. And that next minor channel below is 443 all the way down to 431. Next, let's bring up the scenarios of the day. Alright, here we are with the first scenario of the day, which is our trend day down type structure. We open gap down, start with a slight rally back toward the previous close. We find resistance somewhere on or before that previous close, then begin the downtrend for the morning. We find midday chop around either the possible queen or king support area. And this scenario has a 34% probability. And today, there's not a lot separating any of the scenarios today. So this is the trend day down structure, and let's bring up the next scenario. All right, our next scenario is the rounded reversal day type structure. We could get a continued push lower towards the jack or queen support area and find midday chop around either that queen or king support area before spending the same amount of energy we use coming down to go back up the second half of the day. We could also have a vice versa scenario on this at the open where we continue up and do a move something like this where we go up during the morning and find our midday chop either around the jack, queen resistance area before spending the second half of the day coming back down with the same amount of energy that we went up with in the morning. So that's the vice versa scenario for the rounded reversal day type structure. And let's bring up the last scenario. All right, the last scenario could be our expansive range day structure. We could look to set a decision area or lower boundary around the jack or queen support area before chopping lower, then a visit back to the upper boundary, crossing back up above the previous close at some point later during the day. There's also a vice versa scenario for this as well, which would look something like this, where we get a straight up and possibly a down and getting back down here toward that 441, 440 area. So that's the vice versa for the expansive range day structure. Remember, in the expansive range day structure, we often cross that previous close. And in the other scenarios, whether it's the trend day, that previous close is a pivotal either support or resistance, and in this trend day down it would be a pivotal resistance. So those are the scenarios for today. For those of you that follow me, remember I am actually still on vacation, but I have to manage positions, so I'm going to try to continue to put out the outlooks at least once a week so I can give the weekly outlook. But if I don't, just understand that I am on vacation trying to relax. So this is it. As always, please understand and know your risk, and profit will follow. As always, wishing you a positive trading day. Have a great one.